All right. Thanks, David, for having me and Anka. Hope that you guys have had a really interesting and educational day so far. The markets are actually pretty choppy here in today's session. Not a lot going on out there. As I mentioned right before I started, I had a little scalp I was playing right before class. The strategy is called a 2T, and I'm going to talk about these types of reversals here in our session today. And what it was basically just a little scalp on the Dow. Let me grab my pen, where we have this set of slightly higher highs, and this triggered a short for me. And I went ahead and used what we call their T3 target to go ahead and protect those gains. So good little 30 points here pretty fast. This does have room that we could get a little bit of a larger reversal, but the market's been pretty choppy here today. So what I want to talk about in my class today is looking at timing those trend exhaustions and basically nailing some of these market pivots, whether you're using them to enter a new trend or you're using them to take your gains on a position that you already have. We're going to be looking at market pivots here. And I'll kind of go back and forth with our live markets too today. I was hoping we would get some course setups in today's session. It's just that things are kind of messy out there, but I'll show you our live charts here in a minute. So I've been trading about 25 years. I started in the mid 1990s. Kind of in online trading was in its infancy back then. Technical analysis wasn't really like the go-to style of analyzing the markets. And so what we're looking at is a situation where I came into trading without a lot of background information in terms of exactly how to trade. And I kind of had to teach myself along the way. So it took quite a number of years to really just focus and develop the strategies that I trade today and my system of market analysis. And for those of you that have followed me over the years, I started doing a lot of the expos even back in the late 1990s and teaching really simple concepts that a lot of traders were overlooking. Things like how important time development is, waiting for a certain period of time before you're entering positions. So you could enter it too early, you could enter it too late. How do you know what that do or die zone is going to be? And it just took looking at, gosh, hundreds of thousands of charts over the years and really seeing the patterns that take place in the market. So, what I want to share with you here in our session, I do this class over and over again. It's a really good one. You can actually see the Dow is starting to pull a little bit lower here. Um, but what we're going to be looking at are how to actually time those pivot points in the market. What are those key clues that tell us that a trend is nearing its end and a new trend is likely to begin, or that we're more likely to go into like this choppier range of trading where risk can be higher? Well, humans as a whole, we're very, very predictable, and charts are just a visual representation of human emotions. A lot of the problem that traders run into is building their confidence in reading the charts. So once you have core strategies that you can focus on just those strategies, building your confidence in those strategies, it really comes down to just following the system, taking the trigger points that the system gives you, taking your target points that the system gives you, and making sure you're adjusting your stops according to that system. The problem comes into play when traders don't stick to their system or their system simply isn't developed enough. So they don't really understand like all of the ins and outs, like the little nuances that are going to affect the way the market behaves. So when we're trading strategies, we're trading basically fractal strategies. You might see a strategy on like a 5 minute time frame, right? Well, the real key here is lining it up with a setup on a smaller time frame as well as setups on the larger time frame as well, so that you have kind of all of these things merging together to create like this perfect storm of strategies kind of all triggering in those same zones. And your risk becomes greater the fewer of those multiple time frames you have playing a role. So I'm just going to show you some examples here of how you really can absolutely nail highs and lows in the market. So I've been running a live trading room since the 1990s, and I've taken breaks, get where I need more time with my family. And the way I do it now is I come in and I teach for an hour between 12 and 1 o'clock every single day. And I do this live. So we're focused upon what's actually happening in the markets. And my group is called League of Traders. And I teach based upon that live market analysis. So these are just some of the calls that are examples of how you can actually nail those absolute highs and lows in the trend. And it looks like cherry picking, right? But the thing is, I do this every day. So those that follow me live know this is not an aberration. This is something that I have trained myself to be able to do by following certain sets of rules and criteria. So I gave this class a week ago, and one example is just how I had this low strategy here. This is basically the same strategy from exactly a year prior. And that pivot is based upon the building blocks of price development. So the system of market analysis I use relies upon these key characteristics. So we're looking at trend development or trend placement. We're looking at time development. We're looking at momentum. We're looking at support and resistance levels. And we're looking at volume. So these are all traits that go into building a successful trading strategy. And this particular strategy, these two charts are almost exactly 1 year apart. This is a setup that was taking place when I was giving a class a year ago, same class. And then this was a setup that was taking place about a week or so ago when I also gave the same class. And what you'll notice is that as this is coming down, you can see these multiple series of lows and lower lows. Then we have this pause here, a little bit of a longer correction. In this case, the correction is a bit more in price. We come down and we get these three lows. Same thing happens over here. We get a little pause, we get these three little lows over here. So the trigger point in both of these is that break in that smaller trading channel. And my stop point is just under that low. And the nice thing about this is that as soon as you get an initial low, you can start to move your stops up. So you can become tighter and tighter with those stops. This is a particular strategy where we call it a false first low with a momentum reversal. So you're looking at one low and then you're looking at three lows in quick succession where they have about even spacing between those lows and about a parallel trading channel here. This is a very, very common reversal pattern that happens in the market. And it's beautiful because it not only can give you just like a little scalp type of burst coming off of that low, but it also has a greater probability that it can lead to a pure trend reversal too. So if you are short and you start to see this develop, well, gosh, that break there can actually get you out of your position really darn close to the absolute low of the trend, just because you've studied this particular strategy. And I'll show you more examples of this here as we go forward. But I want to just share with you how it really is possible to get in and out of these markets at close to the absolute highs and lows once you have built confidence in the systems that you trade. So one of the first things that we look at is trend development. And one part of trend development is the impulse wave. Now, when we're looking at impulse waves, we're kind of combining two of the traits of price development. We're looking at the size of a move, and we're also looking at the momentum of that move. So when you have a move that tries to start to repeat itself and the momentum is the same, meaning your rate of change in the price action is about the same, then you have a really high probability that when it gets to that measured level, that you're going to start to see trend exhaustion coming into play. It might not lead to a pure reversal of that trend. It might lead to just a widening up of the trend where you start to get some more back and forth action, but it starts to give you a heads up that, hey, I need to begin to look for traits that this trend is nearing its end and reversal patterns can start to form. So in this particular situation, you can see two smaller impulse waves here as well. And an interesting thing about impulse waves is they tend to come in twos or threes. I rely more on waves of two than waves of three. So you might have heard things like Elliott wave, for example. Well, Elliott wave looks at one move, usually a little two-wave correction, second move, a little two-wave correction, and then third move, and then that is trend exhaustion. Well, that's great, but the thing is, this whole sequence of a trend, it can take many forms. It can have a really large initial move, a shorter measure, a smaller middle move, and then a bigger move again. So you have impulse move here that repeats over here. You could have the opposite. You could have a short starting move, a bigger middle move, and then a shorter finishing move as well. So each of these waves can come in different forms of momentum. This is a more advanced trend. These are more conservative trends. They're easier for newer traders to see. So when we're looking at the chart here, if we're seeing these measured impulse moves, we know we already have two larger impulse moves. It tells me, you know what, this is a zone we might be able to get a reversal pattern starting to form. So with the pop, what we have here is a change in the momentum, two waves of correction, again, similar to what you would see in like Elliott wave, or they would call it like ABC is how some traders or some teachers will refer to that correction, ABC. And that will trigger the buy setup. So we're going to look at different variations of this and how these kind of all come together here in the class. And then I'll show you how some of these play on the charts as well. In fact, I'll show you that here right now on my Dow. So the scalp that I was taking here right as we were coming into class, notice we've got several impulse moves. And this is almost the exact opposite of that chart that I used for last week's class. Let me clear this and I'll pull it over. So you can see how something from a week ago is playing its role today here in today's trading action. So here are those two impulse moves, measured impulse moves, about the same momentum. And then we get a break in that channel. Then we get two smaller impulse moves. So what's happening here is it's basically creating this secondary channel. And the more tilted that secondary channel is here, the stronger that reversal pattern is likely to be. So if we're looking at the move coming off of the low, if this had a move like that, where if we transect this whole trend channel here and compare it to the trend channel here, you have a weaker channel. So your momentum is shifting. So the odds become higher that you're going to get a more immediate reaction coming off of that. Now, in this particular example, we didn't have that happening. This overall momentum is about the same as over here. So what it took to get that to momentum to change was for this smaller channel here to form before that reversed. If we look at the one here today, just into the end of today's session, what you can see is that we go and we transect that trading channel there and we compare that to the overall channel for the upside, there's still not a huge change in that momentum. So what that tells me is that, yeah, we could have a minor high here, but it doesn't mean that it's going to be the absolute high of the trend. It could just go into a longer trading range. It could chop around a lot more, not necessarily fully turn around and reverse. The same thing down in here. You run into that same risk where, yeah, this is a good zone for a bounce, but is it going to be able to reverse the trend? Well, you don't have that shift in momentum to offer that additional confirmation. So once you have something that shifts the momentum, then you have a better chance of that trend fully turning around. So the more rounded you've got those lows, the easier it is for stronger buying to start to come in and really begin to take over. And we still don't have that here after hours in today's session. We did see a little bit of a change in the momentum here with a second two-wave move, which triggered another scalp, but the rounding here still isn't really that great on a bigger time frame. So this would have triggered a short, but your first target level would still be that smaller measured move, impulse move here. So you would still be looking at just scalp action at this point here in the market. So really nice example of just, where we were. And that measured move too was also what I used for taking my profit. So I shorted up here and then use that two-wave little measured move just to take my profits on the little scalp there at the end of the day. So here's just showing you some of these smaller impulse moves. And here's a chart that shows you my entry on one of these where we have, again, a similar type of situation. You've got those measured impulse moves over and over again. This last one here has two waves. But here's something that's starting to happen on this chart. We've got a break of that trend line here. So that trend line is breaking here, and that means that with an additional impulse move, we have a greater chance that things could be turning around, that momentum could start to shift at that point. And you'll notice that it held the smaller two little impulse moves here, but it took another little shift in that momentum to trigger the buy setup. So this is just a trade from last month where we had that measured impulse move, and then we started to see again that little shift in the momentum coming into play for the reversal pattern here. And we'll take a look at some of the markets that you guys are following here too at the end of our session. So here again, shifting in the momentum. So one thing to keep in mind, not all pivot reversals have a momentum shift before a new trend confirms, but a lot of them do. And that's where you can increase your probability and increase your confidence that you are taking something that you have a higher probability of success. So if you're taking something just where you've got the two measured impulse moves and you're taking that channel break as your entry, you could still run the risk that it could come down and form like a larger trend shift. So you could get like that momentum shifting like this that would still give you a lower low. So it's not just the two measured impulse moves that will totally end the trend. You've also got to look at things like the shifting of the momentum and watching for that to come into play. And that's where our little shift here comes in. And then the impulse move helps identify that as a target level to start to protect your profits on it. Well, here's another recent trade, but this also shows you the same type of thing. So we've got these impulse moves on the downside. This one's actually a little bit extended where it has a three-wave move in here. So your middle portion is a little closer to some of those similar ones over there. Similar kind of upside. But again, look at the trading channel. We get that little flush of the trading channel. And that can be our first clue that we can start to look for a larger reversal strategy. And the strategy that forms here is the same one that I was showing you on the previous chart. It's called a phoenix. So what we're looking for that is the channel break. Usually that break will have a two-wave move to it. Looking for two-wave counter trend correction where the momentum now changes compared to that downside move. And then when that second portion of the two-wave correction breaks, that triggers a buy setup. And the nice thing with the Phoenix is that your stop level is constantly rising. So you can connect your absolute low to that second pivot low here. Here's the first one, here's your second one. And then you can just channel that all the way on up. And that is where you would keep your stop on this. So what you're looking again is that change in the momentum. And then that triggers your buy setup. So we have a couple of trades. First of all, you've got measured impulse moves on the downside. Second of all, we've got a fairly measured impulse move on the upside, but it breaks the trading channel. Third, we have a correction where the momentum shifts, and it's basically riding along the upper end of that trading channel. Fourth, we have a two-wave correction. Fifth, we have the trigger, which is a break of that second correction. Ideally, these two corrections will have the same size. And then our stop just rises up under that trend line there. So this is one of the strongest reversal strategies out there that is easier to teach new and struggling traders. And the nice thing about it is that it happens pretty much every day in the market on some time frame or another. So you're usually going to be able to find some version of it. I had a couple of these here earlier this morning. They were a little bit different than the one here, but I'll show you one on the Dow that is a little bit more textbook from pre-market. So we had the channel break here, the two-wave correction, and then the trigger for the buy there. And your main target is just to look for a two-wave measured move here. A lot of times, if something is still really strong on the downside coming into that low, you might need a greater kind of rounding off at that low. So if you double out that first correction, that's going to give you a secondary setup zone. So that time development, doubling it out, that gives you another setup. And sometimes on our phoenixes, this is going to be like your main phoenix here. It'll come up, do a second one like this. Here you want it to barely tap that trend line or do a no touchy where it doesn't actually touch the trend line. So if there's no rounding off coming down out of the trend, you just have your phoenix immediately. What this does is it creates kind of a tilted two-wave correction, and it can allow this to then go and gain momentum at that point. So it kind of creates that rounding by itself and gains that momentum that way. So that's another way that these types of lows can also form and unfold here. So here again, this goes back to the one from earlier. It's not a core phoenix, but it has a lot of the core traits. It has the two measured impulse moves on the downside. It has the channel break here. And then it has the break of that secondary channel. So the thing that you don't have here is you don't have a two-wave correction on this one. I still took it because I still had nice time development. So if you're looking at distancing between the lows, if you have similar time development between those lows, that is also going to give you a really high probability for a reversal setup. So you can kind of think it like inverse head and shoulders timing, where this would be your left shoulder, this would be your right shoulder. And that helps kind of create that rounding off that is developing here. Another thing that you can look for is for volume to decline in here. So in that second portion, if you've got volume dropping off, so here this morning, what you would have wanted to have seen would be a volume drop between around 5:30 and 7:15, 7:30 here this morning. And that's a tick chart there, so I don't have the volume on it, but that's what we would want to see in terms of volume action. Back to my pen here. So here's another one, just another core example, and this was one that took place, I believe it was the day that I gave the last class. So here, a little bit of a difference. Notice that it doesn't actually break that trend channel when it goes into that two-way correction. So this right here is a con. And what that can mean is that it can have a harder time getting that reversal coming into play. So in the case of this setup, what happened was it ended up going out as more of a time correction than something where it fully went and reversed the trend. So if this had done this, you would have a much stronger Phoenix setup where the probability of it going and turning around with stronger momentum is going to be greater. So without that, I still had a scalp. It still gave me, some action, but it's really like what we saw here today at the end of today's session, where coming into this, if we look at this bigger channel here, that reversal pattern, it's basically looks like the opposite of a phoenix, except that it has the higher highs instead. So the opposite of the phoenix is an avalanche, and that would look like this. So your avalanche would look like that. I'll actually change the color. So you would want it to break that trading channel right here. Put in your highs and then do that move right there. And then that would trigger your short for an avalanche. So a 2T is basically just taking that two-wave correction and tilting it to the upside. So if that momentum is still the same though in that second portion where it's tilted to the upside, it can have harder time getting going on the downside. And it can run into the same situation we have here. So ideally for 2T, what we would want to see would be a little bit of a cleaner break. And then when it does the two waves to the high, it has a little bit of a change in that momentum. So you have the stronger move here and then a weaker move here. That's going to help that reversal go into development momentum. And we actually had that happening yesterday on the NASDAQ, one of my trades from yesterday. Let me see if I can grab that chart and show you. It was a 2T as well. Just gotta remember what time it was at. I probably need to add some more time on this. Let's go up to a bigger time frame here. I still don't have enough time. It might have been on the Dow and not the NASDAQ. Well, here, at any rate, this morning, let me clear this. We have kind of that avalanche type of setup where you've got that break of the channel, you've got your two-wave correction, and then the trigger for that corrective move on the downside here. So this is an example of an avalanche. And then show you another setup from this morning. If we're looking at this chart here, what we can see is that a lot of these kind of bursts of momentum have very similar size to them. So these are our impulse moves. And then some of them can extend. Some of them will go into a correction. Some of them will go into more of a time correction. But once you get to the end of that impulse move, when you have those comparable moves, that's where you want to start to look for reversal patterns to begin to form. So this morning, one of my first setups today was the reversal coming off of this low. When it came into the lower end of the trading channel, I now had this two-wave set of a trend, and then I had these three low zones here. Started to shift the momentum here. So this gave me a little 2B. This was the zone of where a smaller phoenix would be. And then breaking this two-wave correction here provides another support level for continuation. This could have gone into a secondary correction. And if it had done that, that's where your phoenix trigger would be. It didn't end up developing into a phoenix on this one, but that's where we would have looked for the phoenix buy setup. So just putting it into kind of the context of what things look like here this morning. So sometimes you're not going to get the triggers you want, but it knows it's good to know like where those zones would be so that you can start to watch for the setups at them. And you might just not get the setup happening, but at least you'd be putting it at a level where you would have a really high probability of success. So if you had that second wave of correction in here, you would have that even spacing. You would have that channel break in your favor. So your trigger point would be a break of this channel here, and that would be your trigger for a phoenix. So in this case, it didn't materialize, but that's where it would have been if it did. And that's something I was watching for to get a continuation move. It just didn't set up. It's really important, you guys, to be patient with your setups. So if you're, trying to build your confidence and you're struggling with taking really good trades consistently, then make sure that most of them are hitting most of the things on your checklist. So if you're looking to start to learn to trade these phoenixes, for example, I've given you a lot of criteria to watch for. And if you don't see that criteria when you see the pattern developing, you know what? Pass on it. You can sim trade it or you can just watch it, but don't trade it until you have that confidence to know that, hey, I can wait for the trigger. I'm not going to jump it. And then you're going to be able to keep your stops and everything really well too. And you're not going to get flushed out of positions as easily. Be ruled by emotion instead of logic. So here's just a lot of examples of these phoenixes on, and they just happen every single day in the market. Now here's the other setup. This is the setup that I showed you at the very beginning of class. And this is another one that happens pretty much every single day as well. And it's another type of market reversal. So you can see the momentum here. This was our little phoenix down in here. So you've got really strong momentum on the upside, but then it starts to shift. Now we get this false first high, and then we get these three highs in a row with even spacing. So this setup right here, this is giving us a shift in the momentum. It's giving us some trend exhaustion, and it's giving us this time development aspect. So this triggers a short right here. And in this case, that short also went into an avalanche. And you'll notice that we've got a break in the tight trend channel here. We've got a break in the wider trend channel here. So it's creating this rounding off that's happening here. So two-wave correction, perfect for a short. Three highs after kind of a false first high, that's another perfect pattern for a short for a reversal strategy. And you're going to see this pretty much every day at some point in the market on multiple time frames. So it's another really strong one to watch for those reversal patterns. You have incredibly good risk to your return. Absolutely. So if you're taking a setup that's a reversal off of a high, like this is a momentum reversal with a false first high. The stop on that is take the distance between these two highs, divide it into quarters, take 1/4, add it onto that trend, and put your stop above that line. So if this is these, let's say these are your last two highs here, high 2 and high 3. Divide that into quarters, extend that trend line, and add that 1/4 here, and then that's where your stop is going to be. Now on an avalanche, connect these highs, and you're just trailing your stop down above that high. So you have a little bit of a disadvantage with this momentum reversal because what we're looking at is a stop that's going to be higher than the trend line and higher than the absolute pivot high. That's where most people put their stop. But the reason I do a stop like this is that after decades, what I've found that if I leave it like that, if this comes up fast and it does like a retest, I'm rarely going to get taken out. If it does get taken out, then it's usually going to be a full stop and would have continued anyways. So when I was doing my analysis, I'm thinking, okay, so in all of these where I got flushed out, what would have been the logical place to keep a stop where even if flush happened, it kept me in the position most of the times? And if it ended up turning around and I was just wrong about the trade, that's the key point that tells me that I was wrong. So this is a lot of trial and error. This is keeping in mind like a growth mindset mentality, scientific method. I'm looking at, hey, if this, then that. If I try this out, how does it work in real time? So it's a creative way of putting a stop. Yeah, it's through analysis over and over and over again and learning what works and what does not work. So these are just two really strong reversal patterns, you guys, and it works on every single market. I predominantly trade, this was today's YM, but it was actually last week because I did it the day of class. But I've traded pretty much every market under the sun, gold, oil futures, silver. Um, Bonds, I've traded Forex, I've traded stocks. So it's something that has really applied to every single market I've traded, and it doesn't matter. It doesn't even matter what time frame you're trading it on either. Yeah, it's purely based upon mathematical spacing and science. I was an archaeologist and an artist before I got into the markets. So very scientific background, but also the style of art that I studied was like real life portraits. So I'm actually looking at not so much abstract, I'm looking at, hey, these are ratios of people's ears and nose on their faces. There's always a little bit of science when it comes to that. So when I'm looking at the charts, I'm looking at just patterns of human behavior and gosh, we are really repetitive, you guys. So here on this trade, this is another example of the same reversal strategy from a year earlier, where we've got the false first low, and in this case, we actually have two, and then we get our three lows, one, two, three, little bit of that phoenix, which is like your little avalanche here, and then my trigger point. So these are actual trades here, and this was given the day I did that class last week, but it's the same one that we have here. Who built the pyramids? Workers, paid workers built the pyramids, not slaves, by the way, contrary to popular opinion. Lots of evidence that shows that they were actually hired workers. Go figure. We did not learn that growing up, did we? So here is another thing that I want to share with you guys that works incredibly well. And I don't use a lot of indicators in my trading. And in fact, the only indicators that I ever use anymore now are Fibonacci. Go figure, an artist would use Fibonacci, right? Well, what I like about Fibonacci is that again, it's something that I studied a very, very long time to learn when I can use it and when to not use it and how to make adjustments on it. So if you have an impulse move that has about an average momentum, slightly stronger, slightly weaker, you can go and you can take your fib fan from the low to the high, and what you want to look for is that 76.4% fib fan as a support level for your trade. Now look at the time development here too. So we have a break of the trading channel. We have that even spacing between these zones of these lows. And now we have an additional trade that we can use for our phoenixes, and that is that fib fan. So one, when you're working at building your patterns, the more of these building blocks you have in your favor, the stronger your strategy is going to be. So look at the volume too. Look at how that volume is declining here as that is going into the correction. So we might not have the cleanest two-wave correction in here, but we have everything else working in its favor. So even without that two-wave correction, it's still going to give us a strong buy setup. And that time correction aspect can come into play again as well because it can give us a secondary continuation. Now, what's interesting here is that since this is tilted on the upside, we now have two corrections. This should have just taken off. And 80% of the time, that's what's going to happen. So if you do not have that happening, that means you need to get more aggressive with your trade management because you're not likely to get that strong impulse move taking over. So two corrective waves in a row where they're at a low level in a trend. So both of these are under that 50%. It should take off the second time. This should either just tap that fib fan or do a no touchy and then take off. So if it's not doing that, we can use technical analysis to help us get out of that position before it does a correction. Looking at the measured moves, you can use that channel break or you can use the measured move itself to take your gains off on the position. So it's really important to know what should happen, and that takes time, a lot of studying. You can join me every day at noon Eastern, where I spend an hour teaching you guys, just like this here. Um, or you can, take courses from people, just build your knowledge base, but try to find just a couple of core patterns to work from. Once you have those down, then you can go and branch out. But there's a lot of details that go into these. For those of you that are trading on NinjaTrader, Fib fans are not built into NinjaTrader, so I built them for you. So if you do want to add Fibonacci fans to NinjaTrader, this is the link that you can use. It's ToniHansen.com/trade tracker, and that will install it for you. So on a chart here, let me grab one. we wanted to add a fib fan, for example, on here. Now trade tracker is down here. So we've got Fibonacci fan. And if we just went from the very low to the very high of an extreme trend, you might get a reaction off that 76.4% fan, but if this momentum is substantially stronger than average, what often tends to happen is that that reaction is stunted. So what you want to add when you have a fib fan is you want something that has more of an average impulse move, an average trend move. So if you don't have that, what you would want to do is if you've got a double bottom, drag that over to the previous low or double top, can drag it over to, your new high. Another way that we would adjust this fan is this pulls back about just over 50%. So I can take the high of that, hook that low up with the 61.8% fib fan, and that's going to give me my next support level at 76.4%. So we didn't have a good zone here, on this one to use fib fans, but it is a core tool that I do use, and I do teach how to make these adjustments too. So when you do have an extreme move, there's actually rules that we can use for adjusting those fans so that you have them lined up properly. We just don't have that kind of a market right now for fib fans because things have been a little bit choppier. So you can see there's not a lot of Phoenix and Avalanche setups over the last couple of days. So here is taking that one trade and applying the fib fan. So look again, this is really extreme as far as that upside impulse move goes. So what I did there was I used the absolute low, and then instead of using the first high, I shifted it to the second high. And then that gave me my 76.4% fan, but it also helps me with identifying target levels because that 27.2, 23.6%, that becomes a resistance level to look for targets. So this is just one of the adjustments that I teach with how to use fib bands. And that's the thing to keep in mind with any indicator you're using. There's specific rules that you need to use in order to put them on proper. So here again, extreme impulse move. It's a measured impulse move, but it's an extreme impulse move. So in this particular one, we ended up seeing these slightly higher highs happening. So I took the fib band from here, pulled it to the absolute high, and then that gives me my 76.4% as my support level. So these shifts, they're logical. There is a method to the madness. It's not, oh, let's go put it at a random high or a random low. There's very specific levels that we will use and adjust them to. So if you don't have just a typical average impulse move up where you can go straight from your high to your low, get your 76.4% fan support. If you have something like this forming where you have like a more of a megaphone, the rule for the megaphone is to go to that absolute high. And then you're looking at the support at the end of that. And this is actually one we call a mega phoenix because it is a phoenix. It's just taking the form of a megaphone. So it's a variation of the phoenix setup. And this one just shows you a little bit more example with the time development and how that aspect can play a role, as well as taking your fib fan. If that momentum is extreme, if you got that double top, pull that fan over to the second high instead. And then it's going to give you your 76.4% support level. So those are some of the tools that I use, you guys, and what I use for trading. Here's just another example showing the false first low and the shift at the lows, false first low. And then here's your 3-level shift showing your momentum change here, measured impulse moves, and just how the stronger that shift is, the easier it is for the market to go and take off. So the more rounding you have, the better that tends to be as far as your reversal pattern is. Just another slide here. This is showing you coming off of the highs. So this was a short trade that I had. And it was, again, kind of more of like a megaphone type of situation. So when it went to a slightly lower low, I took my fib fan from that high to that low, and then that gave me the resistance. And you'll notice that it broke that trading channel right there. So that helps me with identifying that as a reversal pattern. If you guys want to learn more about my style of analysis and how to build a trading system and actually dive into one of my favorite patterns and strategies for the trading system, here is a link for a 5-day program that is like the class here today, but it goes into much greater, concise details. And it is available on demand. So you can go and study that whenever you want. And then just email me at Toni@ToniHansen.com if you ever have any questions on it. And I'd also like to encourage you to check out League of Traders and come and join me over there too. You can find a link for that on my website as well, just ToniHansen.com. So David, I want to thank you for having me here today. Do I have a couple more minutes or shall we round it out and head it over?
Yeah, you're the last presenter of the day, so yeah, you can take a
Oh,
few minutes
cool.
extra if you want.
All
That's
right. You guys have
fine.
some securities you want me to take a look at. I do a free session every Friday at noon, by the way. It's called Forward Focus, where we take a look at what the market is doing and how that is likely to play out on a larger scale. So, yeah, you guys, I've been doing this live for over 20 years. So, there's not a whole lot you can throw out at me that's going to be a surprise. Let me pull up trading view here. We can change this. Cats. You cannot throw a cat at me and have that be a surprise either. I have two Fosters in the room with me right now. I'm used to chaos. Sometimes I'm trading in here, you guys, and I've got foster kittens, so I'll have like these 5 or 6 little crazy nuggets running around. You got to be able to think on your feet if you're a trader, right? So if we take a look here at this is oil, you can see a lot of those impulse moves here on oil. So these would be considered stronger than average impulse moves. So you can't use a fib fan on a move like this. You would need to use a fib fan on something where you have a slower overall move. So you could go and put a fib fan on from here to here, for example, and that would give you resistance levels on oil on the upside. But we can't use it on the really steep moves because it's just going to bust right through them. So you need to have more of an average trend when you're using your fib fans. Let's pull up some of your questions. You've got HNRG. And this, oh my gosh, you guys, this low down here, this is beautiful. This is exactly what we love to see when a trend is ending. So what you'll notice is you've got that really extreme trend, basically 3 waves with a more extreme move here in the middle. You got your initial trend channel break here, but when it tries to pull lower, that momentum is still really strong. So if you're looking for a reversal, this might have done a 2B setup here, but it would have been like the earlier 2T like this. So you still have pretty strong momentum on that. So this would have been a buy here, but it still could have just gone into a longer trading range like the overall market did here today. So what's nice about this HNRG is that it went and it shifted. with two waves again. So you have that 2B pattern again, but now it has the lower low with a change in momentum. So this is triggering a solid 2B reversal pattern right here. So this is a perfect example of what you would want to see for that 2B. And basically, we would be viewing this as like a false first low to your 2B and this as your real 2A correction for it. And then coming out of that, that's where you come into Phoenix territory. So what we have here is a really small, kind of steep Phoenix. But once we have two waves, this does another one with a nice little 2A correction too. And look at the volume here. So even though this is selling off, you've got that really nice decline in the volume. And that's exactly what you want to be looking for when you're looking for these phoenixes. So you've got a break in your trading channel, you've got your two waves of correction. The only thing you don't have is your distancing between your lows. So what that means is that once it gets over to that similar distancing, that's another zone where things can take off again. So it helps to keep that in mind because that can give you additional setups, whether you're building into a position or you're looking at, hey, do I want to bail on something that's not really going yet? Well, give it that extra amount of time and then you have a better chance of it going and flipping back around on you. So intraday, this is a really good example of how low patterns form in the market. Let's back up and take a look at this on bigger time frame. So if we look at the Dow here, another thing that could have happened at this high is we could have seen something like this happen, so that could have shifted that momentum on the high side too, that could bring in another sell-off. So that would have been another way that would have changed the momentum a little bit, like it did down here. But yeah, pretty intraday example on that chart. That's actually really good placement on the larger daily time frame because you're on your third impulse move. So you got trend exhaustion and then the momentum shift, which right coming into the lower end of that megaphone. So that's actually really good time development for that to have bounced too on that larger daily chart. Right now, things are going to be trickier. You've got the move into what we call an ankle zone of resistance. It's basically where your momentum starts to shift in here. And this can easily go into longer widening up zone. So the problem with this trying to go into a Phoenix here is that it went and it built momentum. And when you have a move that's built momentum, strategies become higher risk because there's so many different versions that can happen and form. So if something is starting out slow and you see that trend kind of skyrocketing, you want to focus just on what's happening on the intraday timeframes because that can go into a longer range. It can go into a really rapid pullback. It could go whiplash, or it could even just pause and still continue with extreme momentum, like seen on like the Turkish lira, for example. So it's harder to actually go and time those highs. What you want to look for are things like this, where you see that momentum actually shifting so that you can get in on a smaller time frame setup. And things like this, you've got a 2T here. The problem is that momentum is still really extreme. So it corrects, but it doesn't do really rapid correction. And you also have a harder point when it's going and gaining momentum to get a setup that actually breaks the channel first, because your trading channel, it goes from less extreme to more extreme. So even if you're breaking the more extreme trading channel, you're still part of the bigger, less extreme trading channel. So timing those as reversals, that's a lot higher risk. Yes, you can get a lot bigger momentum movement, but that also means that you can give back gains very, very quickly too. So I don't usually recommend traders start with that. Using those popular securities though and diving down to intraday, that's great. Just don't dive into them as like trying to pick those types of tops or bottoms. Those are going to be the hardest. Um, Boeing and then NSIT. Boeing is something we've been looking at a lot lately. So you've got that big megaphone here. And as you can see, I've actually got fib fans on here because I was teaching Boeing here the other day. So we actually came right into that 76.4% fib fan on Boeing here on the daily time frame. So you've got that big megaphone of support, and this is just giving that initial reactionary move off of that support. Let me back it up to a weekly. We've got kind of like dueling trends here. I'm trying to remove this quick. So if you look at this on the weekly time frame, you actually have a zone where this is triggering an avalanche, but it has such an extreme impulse move on the downside that even on a continuation, your avalanche should be more likely to go like this. And that's what I'm expecting is going to happen with Boeing. So even though we've got that support here to start with, I'm viewing this as being a support level where it has a better chance of ultimately ending up breaking down and kind of going into more of a choppy movement back and forth as it does it. So for a strong avalanche where you get a really nice drop, you actually want the opposite. You would want something where it's coming up strong. You've got a little bit of a slower correction, and then it shifts into a two-wave correction like this. So you would have fast, slower, slowest, and then the trigger for a short. And that's going to give you the best chance for that actually breaking down the strongest. So this would be called the shallow avalanche. And the opposite would be true for a shallow phoenix. You would have stronger move, slower move, slower move, and then greater chance that you're going to break out with a lot stronger momentum, which is what ultimately ends up happening down here. So there's good minor support in here, but I would view it as something that you're going to see more back and forth action on the daily time frame, and then ultimately more weakness. HSIC or NSIC, sorry about that. So we're at a good measured move zone here. Got the tilted correction. So you're at that measured continuation. So this is what we would consider to be a widening up zone. Look at how it is another one though that built momentum overall. So you want to be really careful when you're even though it's showing technically trend exhaustion, you want to be really cautious on these as reversal patterns because on the daily time frame, this can go into many different types of setups. So for like a larger correction on a daily or weekly time frame, you might look for something like this to begin to form, where you could get that high. But even with that, you're still in the bigger trading channel. So when something is going like this, even if you get like that reversal pattern forming, this can go and do what we call a momentum reversal plus. So it has the three highs, two-wave correction, two-wave high back, and that starts to round off the highs even more. So that's definitely something that we could see happening here where it ends up going into a much bigger time correction and getting more of these smaller swings happening at that point. So that would be something to watch for here on this one. A little bit of a correction and then a buy. So looking intraday in a couple of weeks, well, about 2 months or so, if it could do a little pullback about 2 months, basically coming back into that congestion. That would be a good buy zone if you're looking for a swing trade. All right, gang. Thank you for inviting me here again, David and Anka, and I will see you all next time. So you can reach me at Toni@ToniHansen.com, and I'll put that slide back up for my class. So I know no matter what level of trader you're at, this is a really good class. This is one that I recommend all of kind of my newer traders, not necessarily new to trading, but new to my style of trading. I recommend that they take this class. We are looking for things where we're looking for 10 to 1 return on risk, and they are very high probability setups that you're going to find every day in the market. So take the class, send me your questions, and join me in League of Traders. And I look forward to getting to know you guys better. All right, take care, Dave.